Hi guys, it's Bogdan here from System Traders. In today's video, we're going to tackle a subject that we've not found too many videos upon, at least not on YouTube. Most of the gurus will state things like, when the price crosses over, then buy. The question is, which price? The open, the high, the low, the close, an average, which average? So in this video, we'll actually test this in 5 different formats using a moving average of 30 periods on a daily chart on Nasdaq. All of our tests will start in 2009. The rules are very simple for a trend following strategy. When the price crosses over the 30-day period, then we go long and we close the trade when the price crosses under. The most important thing here is to note that we are calculating the moving average with the close, the open, the low, the high, and the average, besides the actual price. So we are not talking only about the prices I've just mentioned, and that's the main catch. So let's run the test first using the close price and see what the results are since 2009. We've got a maximum drawdown, in this case of 65.7%, and the total number of trades of 145. The win rate is 26.2% with an annual return of 16%. We've got a Sharpe ratio of 0.31 with a standard deviation of 50.56%. It's not bad at all. Looking at the win rate, it's quite typical for a trend following strategy. But is this the way to test this? So let's look at the open price. We've got the maximum drawdown of 37.7% with a number of trades, 145, at a win rate of 44.8%. The annual return in this case is 24%, and the Sharpe ratio is 0.4. The standard deviation has increased, and now we're at 60.1%. As we can see, we have a lower drawdown and an increase in the win rate. Annual return and Sharpe ratio have also increased. We have the same number of trades, but there's an increase in standard deviation, so we've got a higher risk in the trading strategy. In the third example, we're going to change the logic and look at the high price. So we've got the maximum drawdown of 44.9% with 117 trades at a win rate of 27.4%. The annual return is 21% at a Sharpe ratio of 0.34, and the standard deviation is 60.6%. As we can see, the maximum drawdown has increased, but it is still lower than when trading on the closing price. The win rate has dropped though, maybe signaling that there were more bull traps since we're looking at the highs of the price candles. The number of trades is also less, so at least we're not over trading. Let's now look at the results of trading the low price. We've got the maximum drawdown of 42.5% with 135 trades. Win rate is 35.6% with an annual return of 21%. Sharpe ratio is 0.39 and the standard deviation is 53.69%. As we can see, the win rate has increased slightly and the standard deviation has decreased while raising the Sharpe ratio. Now let's look at the mean of the high, low, open and close and see what that means in terms of results. So now we've got a maximum drawdown of 27.7% with 121 trades at a win rate of 34.7%. The annual return is the greatest so far, the highest so far at 30%, and we've got a Sharpe ratio of 0.45. The risk is also the highest one at 65.45. So this one seems to have the best returns at 30%. It also seems to have the lowest drawdown, but for some reason we get the higher standard deviation. In conclusion, even a small thing like the price selection can have a huge effect on the results of your strategy. It seems that most traders are using the close price or the open price on the daily charts, and there might be some inefficiency to speculate there by using other price types. Although, to be honest, we don't have a strategy using this one. As you can see, the annual returns varied between 16 to 30%, the win rate from 26 to 45%, and the standard deviation from 50 to 65%. And this is just one small thing we can look at, which most traders ignore or don't even take into consideration. As a rule of thumb, any inefficiency like trend should manifest itself using any of the price selections. So in this case, it actually does. It's a simple trend following strategy on Nasdaq that we know for a fact was trending over the past 15 years. Obviously, this shouldn't be traded in this format, and it's just something to consider when you're trading or building your own strategy. In case you like the video, just give us a thumbs up, and if you want to chat about any other algos, leave your comments. And if you've got any ideas that we like, we might implement them and test them and make a video of them. Thanks a lot for watching. Have a good one. Cheers. Bye.